on, guys? It is Dylan here. Today I will be bringing you a technical analysis on the ticker symbol OEG, Orbital Energy Group. Before we get into it, I just want to let you guys know that I am bullish on OEG. I do see OEG being a very undervalued company right now, and it does have price targets from analysts as high as, I believe, $16 for the year, with lows of $12. So that is very impressive because analysts do have a tendency to a little bit undershoot, you know what I mean? They'd rather undershoot than overshoot. So personally, I think this stock can run a lot higher. But with that all being said, let's get into the techniques. So you can see that we have a nice support at this $3.96 mark. As you can see over here, we had some key consolidation over here where we kept bouncing back over that. So that is good. That was a support that lifted us to very high numbers. We have came back down to meet this area of consolidation over here, and you do see that we did dip under it momentarily, but I wouldn't call that break of support. You know, that's just a head fake. So keep an eye on that big time. And we also did regain the resistance of the consolidation over here. So it is now a support at $4.70. So keep an eye on these two key levels. And on the daily action, we did dip down with the market, and we went all the way down to $3.60 when we did rally. We got a nice wide bar, regain that support, and then we got another wide bar, regain that support, and currently we're at $5.36. So from the lows of the day, from $3.60 to around $5.35 or so, is a 50% gain. So for these reasons, I am a little bit cautious on establishing my position, but I do think this is very undervalued, and I might get my hands a little wet before I really establish a big position. What I mean by that is I might just find a good entry, maybe even on a break of resistance to try to momentum trade it, and then, you know, just in case it does go down, I'll dollar cost average down, because I do see this being a great mid long term stock. So you can see this resistance at $5.50 is a pretty stubborn resistance. We definitely have to break. Also a resistance at $7.21. And you can see right here in these blue lines right here, which I'm going to make a little bit brighter so you can see a little clearly. I do think that a little falling wedge pattern is forming out right here. As you can see, we hit the upwards resistance right here. We came down, met that, came right back, and then we met that. So if this falling wedge pattern does continue, we could either break out right here and retest this support line at $5.30 and break the falling wedge, and that is a bullish pattern, so we will see a nice rip, or we could get rejected at this downwards resistance and go back down to test the support to hopefully get another bounce to break this. So these are all crucial things I'm watching this coming Monday, as I do want to establish a position. This is not financial advice, and anything I say in this video is purely for educational purposes only. Okay, with that being out of the way, let's get into the indicators. So you can see that the 200-day MA is kind of well above us on the 2 hourly, but that is fine. I don't think too many stocks have this under them. A lot of stocks that had crazy momentum like this before the market crash obviously took a big hit, and I think this is why you're seeing this happen. I don't think this is a bad stock, and I don't think people, further research the stock and they're like, oh crap, I got to get out of this. I think it's just, weak hands that don't know what they're holding, and I'm trying to take advantage of this, but keep an eye on the 200-day MA. We are above the 9-day EMA if I go right here. So this is a more support for a short term. It currently is a support. It could be a resistance, as you see right here. We have been under that for around, I'm going to say like 5 days or so. So we have been under that, and that is good that we regained that support, because that is crucial. On the MACD, we are in a golden cross, which is bullish. You like to see that. A nice spike of volume to end the day, which is pretty good. You see that right there. Let's go to the daily really fast to go over this. So you can see on the daily this $3.89 mark that I did mark up. Definitely is a nice support on the daily, and all the supports really do line up with the 2 hourly with the daily. So keep an eye on all these, and we are above the 200-day MA on the daily. So that is bullish. That's more of a long-term support to resistance, and we are below the 9-day EMA on the daily, so that is bullish, but we did get a nice hammer candle right here, which does show low price rejection, because you can see we had a high of the session right here, which we basically closed off at, only a 5 cents off or so, but we had a lot of price rejection over here, around 50% price rejection. I mean, that is a big candle. A lot of the people that trade only primarily daily candles on the candlestick time frame. This is a very nice bullish shine to get into a stock, so mind that. And we are in a death cross on the MACD currently, but we have been correcting with the market, and the volume has died off a little bit, but it is a market sell-off. Like I say in every other video, I do expect it, and the RSI is in undersold territory. We did see a little bit of a snap out. I would like to see if we can continue this, but this is undersold territory, and primarily you like to see your stock around 50 to the 70 range to be healthy. So this is a little bit undersold, but you could see this is a good thing that you're getting into the stock when the momentum's low. So when it picks back up and rides to that $20 range, hopefully, you got in early. But with all that being said, I don't want to keep you guys here any longer than I have to. So I am going to end the video right here. I appreciate you guys so much for sticking to this point of the video. Please like, subscribe, all that, and I am out.